Hello, everybody. Jackson here with the Wealth Squad. Today we'll be talking about opportunity in the market and where to find it. So, this market has jumped back up recently after a hard couple of weeks. Um, and when the market jumps after a fall, people tend to be scared to buy because they feel like prices will continue to fall in the longer run, as in the next day might be up, but the next week will still be down and we'll hit new lows once again. Who knows if that'll happen? Honestly, no one does. So the best and smartest thing to do is to buy opportunities when they align themselves, and you have to measure your personal risk to reward, as well as you have to ask yourself, is this stock a good price? Is this stock trading at a good price relative to the past, as well as the company's earning potential? Um, and when you really think about what this price will be in 1 year instead of 1 month, it changes everything. So, speaking of, let's talk about Facebook. So, we're looking at Facebook stock right here, ticker FB. Um, was once the top seven, pretty sure it's still in the top 10, but has had a tough hit, gone from 380 to under 200 at one time. We can see the price right here of 210 was trained back in August and July of 2018, 4 years ago. Then pre-COVID, and then now, right now. So I honestly think Facebook is one of the cheaper stocks out there, one of the better opportunities, because number one, I think it's too big to fail, and well, it's honestly trading at a attractive valuation, has a low PE, low PEG, it's growing earnings, still founder led, and that all points to a good, solid company and investment. So we're looking at Facebook. You can see the lows of the last um, month have been 186, and since then we're trading at 220, uh, up 20% just in 2 weeks, not even. But you have to realize, yeah, sure, we're up 20%, but we're still down over 42%. From the very top. So you still have a strong potential to make, you know, 70% of your money instead of 100 or so. And that's still better than nothing. And Facebook is not a company that's going to disappear off the planet tomorrow. It'll be around for a while. It's diversified in different areas, not just social media. It's looking to become like an Apple, just a hand in every industry. You got phones, you got computers, you're starting to get into cars, you have in your ear, you have, um, you know, you, the speaker in your house, that type of thing. It's more of an industry grab, and Facebook is definitely leading the way in the social media aspect. But yeah, still a solid opportunity. 220 is not a bad price. Initially, when Facebook fell, I thought 240 was a good price. I was ready to put it all in at 240, but I just waited, started getting that in at 215, 213, 205. Really happy with my entry. And I'm still adding to Facebook just because under 200 or 250 at this price, at this time, at this year is stupid cheap. So Facebook is definitely still cheap and still a solid opportunity. Next, we're looking at Netflix, another one that's been destroyed within the past couple of weeks, months actually, since November. We can see once $700 now trading at 360, 370, down almost 50%, almost cut in half um, in just 130 days, right? And when Netflix, a company that everyone uses most every day, every single day, um, and they're only looking to increase prices as inflation gets them as well with content creation. And they start out as only a streaming service, but now they're actually making movies and shows, and that's a whole nother revenue source. And they're pretty good at it, right? You ever seen Stranger Things? But anyways, Netflix pretty dang cheap, down 46 or so percent. But in the last month, we've seen a jump from 330 back to 370, up 13%. Not as much as Facebook. So a better deal you're getting um, if you're just looking at price direction. Um, but Netflix is on the grow side, not as much of a deal as Facebook due to the valuation and the earnings potential and the PE ratio. You have to look at that stuff. So depending on what type of investor you are, more growth, more value, Netflix is definitely more on the growth side. So it comes with a little bit more risk, but buying at 50% off one of the top companies in the world is, I wouldn't call that too risky. So definitely looking at Netflix. And the last one is not as beaten down as the others, but still one of the easier mindless plays, and that's Starbucks. We see at a peak was trading at 126, now below 90, down only 31% compared to the 50 or so percent of the other stocks. Um, but we're seeing prices that we haven't seen since July 2019 and August 2020 when COVID started creeping back up. And you have to look at the chart kind of like during COVID, right? You could see it fell really a lot in a couple days and started rebound and people were getting scared, but eventually the longer term trend was up. So we're looking at the same type of deal. We've seen a large bottom, a price that we may not see again, and then a jump, and now we're still deciding where we're going next, kind of in these days right here. Um, in the longer term, of course, Starbucks will be back above 100 uh, soon, in 120. You just got to think of every single day they're getting customers. It's not something that the internet can replace. It's something that has brand value, price value, because they could raise their prices and people will still get Starbucks. It's a brand moat more than anything, kind of like Apple. Apple could charge $1,000 for a phone, which they do, and people still buy them. Um, Same with Starbucks. It's more of a brand type of clout than anything. So priced at 88, and it's also dividend paid. None of the other stocks we talked about today pay a dividend, even though it is kind of small. We're looking at $2 a year. But yeah, Starbucks, another one that's pretty cheap, down 30% from the peak. And it's one of the easier plays that many people don't talk about. Sure, getting Facebook at 200 or Netflix at 330 is a good deal, but Starbucks at 88, that's still a solid deal, and no one's talking about that. So we got three stocks. You got Facebook, Netflix, and Starbucks. Still solid opportunities in this bounce back market to look into. I hope this video makes you some money. If it gives you an idea, please hit the like button and subscribe for more videos every Monday, Wednesday, and Friday. Thank you for watching.